order blocks that work in 2021. How to spot smart money movements. In this three-part video series, we're going to look at order blocks that work for 2021 and show you how to identify a good order block, how to prepare to trade an order block, how to bank pips using the My Trendline Breakout Strategy with an order block. This strategy will enable you to make money from the comfort of your home. Here's a disclaimer, it's required by law. Please subscribe, like, and share. Help us to help others to learn to trade Forex. And remember, we enter all trades with risk. Let's get to it. Hey traders, how you doing? Welcome back to part 2 of this 3-part video series. Here we're reviewing the ICT order blocks and we're considering how to prepare to trade an order block. Remember, the order block, just as a quick review here, is a bearish order block, as we see here, is the up candle prior to the down move. Yep. So the up candle prior to the down move, the up candle prior to the down move, the up candle prior to the down move. I've chosen the pair here is the New Zealand CAD. And the reason I chose this pair is because there's a few situations that occur within this pair which highlights the fact that there is no holy grail in trading. Yeah? Let me show you exactly what I mean. So here, there's order block. We get the down move. It forms this order block. Down move, we go up. Back into this order block. We're expecting a move down. And as you can see, that's a failed move. It doesn't go. The order block gets violated. Order blocks basically come off an engulfing candle. So that's an order block, which further gets violated, creating this one here, which is respected and goes on. So in trying to trade the order block, just in this little area here, you can see that there's a couple of losses here, because that's a turn. That becomes a little bit here. Come back to retest. You think it's going to go off down there. Doesn't happen. So let's review the order block in a bit more detail. And let's plan. Let's prepare. How do you prepare to trade an order block? Right? So here's order block. Right, up candle price down, price comes back to it, you're prepared to take that short. Order block, down candle price up, price comes back to it, you're prepared to take that long. Okay. Order block, price comes back to it, you're prepared to take that short. Okay. And even this one here is a bit of a situation. But anyway, so these red blocks are the ones we're going to trade. Notice this one here. I mean, it's pretty good to review good and bad trades. This down can project. So this is the order block. Price comes back to it. We'll be getting ready to trade it. Okay. So what we're going to do, we're going to drop down onto a lower time frame chart. We're going to look in the areas where we think price was going to come back. Okay. And then we're going to consider how we trade it. This is based on the premise that the order block is the bearish order block is the up candle prior to the down move. The bullish order block is the down candle prior to the up move. Okay, so let's do that. Let's drop down to now last time we looked at the 4-hour chart. Okay, and if you recall, This is, I'm not going to keep this as a long video, actually. This is very, very easy. If you're recording the last video, if you haven't seen the last video, we'll put it in the description link below. But when price got back to the order block, we got a pattern that typically showed up. For one thing, we got this here, the crossover of the blue and the red, which is the 9 and the 21 period moving average. Yeah. So we got that. So in this series, in this here, we kind of almost got it. There was just no follow through. Right. So that would have been a small loss. Okay. That order block is now violated. This order block forms up candle prior to the down move. And we come down this one. This was respected, so we're looking for respect here. And here we get it. 921 cross. And we get the movement away. Right? And then in this one here, this is a winning and a losing trade, because we do get the 921 cross. We get 2 of them. Right, well, call the second one confirmation. How about that? And it comes down. Let's have a look and see. How many pips do we get? There's 60 pips. And this one gave us that little, remember we did the drawing? Yeah, the V patterns in there. Okay, this one here, well, we don't see the double top here. According to the last one, we'd see a double top. You get the V pattern, put a little smiley face, and you expect it to go away. Right? So we didn't get the V pattern there. We didn't get the V pattern there. I mean, this here, you can make it to a V pattern, right? And then price goes away. But that's not the order block that was expecting a way. So I'm not going to classify that as a trade. That's why we was expecting one here, return to that order block. We was expecting one here, return to that order block. We was expecting one here, return to this order block. And we can only trade the pairs that, well, in the area that of expectation. You cannot trade, here's an interesting one, you cannot trade in an area where you don't expect something, because how can you trade that, right? And here's an order block, price returned to it, and completely violated, pulled back into it quite interestingly for retest. But nonetheless, if you're expecting the pattern to show up, which we know what the pattern is, right? In the area where the order block was, and then to trade it, and you do not get that pattern, then it's very simply not a trade, right? This is a particularly good video because it's not that I've gone along and cherry picked trades that worked, right? What we've seen here is that, yes, there are trades that work, right? Like we got this one here that worked really well. There are trades that worked. There are trades that kind of sort of worked. You know, pull back, 60 pips. If you was expecting it to go down here, that could well have turned out to be a break-even trade, right? Here we got, this one didn't work. This one did work. This one kind of sort of worked, and this one too. So we got a fail rate, 1, 2 absolute failures. This one depends on how you trade it. You apply multiple positions, take off some profit along the way, but I'll call that break even. So you got one good trade on this one, one good trade. But this just shows you how to, as we said in the outset, prepare to trade an order block. Yeah, on the premise that the order block is the bearish order block is the up candle prior to the down move. The bullish order block is the down candle prior to the up move. And of course, time of day is always a factor when taking these trades. Typically, according to ICT, the New York session, and then you're looking for the optimal trade entry, right, which is that swing there. Okay. The optimal trade entry. Here was so you can go to that be the optimal trade entry. I mean, that's a really good move, 160 to 49. But again, right, you gotta have your rules for getting into the trade. We'll discuss that in the next video, which is gonna be so exciting. How to bank pips using the My Trendline Breakout Strategy in conjunction with the order block. So we looked at the New Zealand dollar. Here we looked at the New Zealand CAD. Hey, let's look at a different currency pair next time, just to expand on the understanding of these order blocks. Please like, share, subscribe, and part 1 will include in the description below, so that if you haven't had a chance to look at it, you can get a look at it. And look forward to seeing you guys in the next video. Thank you so much, and bye-bye.